Hey there, everybody. It's Bob with Trade Genius. Got my good friend Phil here, and we're going to talk landings today, economic landings today. No landing, soft landing, hard landing, or where the heck is the landing gear? Stay tuned. We're going to share with you what we think is going to happen and how to trade it.
Trade Genius.
Okay, Philip, I'm gonna throw this one at you here. You found this article, and I'd like for you to maybe talk about the article, and then talk about what you feel is what's going to happen, and then how we're going to play it.
Yeah, actually, I grabbed this off of Twitter, and I apologize. I don't have the person who posted it, but I grabbed it because I was cruising through some stuff. But I thought it was really good to be, a helpful reminder as to how these things typically go. You know, the old saying, nothing new under the sun. Basically, what we have is the left-hand side is 2007 headlines. What you see there in the top left corner, International Monetary Fund says soft landing ahead for the U.S. economy. Okay, that was on August 6, 2007. Next one below that, Fed Chairman projects soft landing for U.S. economy. Business International Herald Tribune, February 15th, 2007. One below that, U.S. economy on track for soft landing. Again, this is September 25th, 2007. Now, fast forward to 2023, right? Now we're talking 15 years later, 16 years later. IMF says Western economies heading for soft landing. Fed's Powell, prospect of U.S. soft landing remains alive. And then Dallas Federal Reserve forecasts a soft landing for Texas economy in 2023. Here we have all of these announcements that are mimicking what we saw in 2007. So was 2023 like 2007, and now we're dealing with a potential top in what would be our 2008 moment in Q4. I would say it's highly likely. If you look at the jobs data, the last jobs number was horrible. It was 12,000 was the NFP, Bob. And once for job numbers, and specifically the NFP, the non-farm payroll numbers, once they go negative, that's pretty much your trigger for a recession. So then what do we have left? We only have the initial claims number, which is still pretty low, but once that starts to rocket up and we're looking for 365,000 on that, we're not there yet. It's still down in the hundreds or something like that, 150,000. So we got some room to run on that. And the yield curve hasn't hit our 0.6 threshold, right? It's just become positive again, coming out of that inverted state. So those are the two things that are allowing us to continue to run here. And plus we still have a lot of money sloshing around in the system. But once we hit those thresholds, Bob, and we're getting our blow off move too, right? Our wave 5 blow off move is happening, right? That we're seeing that obviously today, another big day up, climbing the wall of worry. Election, usually get a bit of a relief from the pump into an election. Didn't get that. We had an FOMC announcement, didn't get any pullback from that, and now we're going into OPEX with all of those Vanna and Charm flows that keep things supportive. So even though we're supposed to statistically see a pullback after something like what the FOMC did, we actually probably aren't going to see any pullback until we get into next week, and then and even then it might be pretty mild. So I'm thinking, okay, we got a blow off move. Blow off moves never end well, and we got headlines that are mimicking 2007, and here we are in our 2008 moment, our 2008 year. So I think it's all lining up for one of those deals where next thing you know, all of a sudden everything's not working. And we're seeing retail get sucked in too, right? Retail flows are coming back in right at the very top, which is, one of the most reliable signals that there is. So I just think it's going to be great, and then all of a sudden it's not.
Yeah, and I'm going to let you keep talking too, because I agree with you. We have a little trump for you. Tomorrow we're going to show you a chart also on what Phil's talking about, what big money's doing. Monday we're going to show you a chart what happens between now and the inauguration and afterwards. But I want to throw it back to you, Phil, and do a little bragging on you, because you caught that 49,000 bottom on Bitcoin, and these things are always a struggle. I get a lot of questions from people. People are nervous about, how do I get in? Do I get in? Am I going to get in at the top? Am I going to get blown away again? And you DCA'd, which is dollar cost average, people in onto crypto, Bitcoin specifically. And I think we're now riding on almost a 40% wave higher. You want to kind of talk people through like how to do that. But specifically, you could take credit for that move, but also talk about the big weekly candle too. So I'm going to throw it back to you on that, because it's important, because big money is going to be made fast here, and you're going to have to be nimble.
Yeah, so basically, we were dollar cost averaging and lower, and then letting kind of this move up into the upper part of the range play out, which it did. Because then now it's like, okay, once you have the breakout move, now you're getting confirmation instead of having to say buy at the upper end of the range only to have it retrace. So yeah, we were down there in the low 50s and then all through the 50s and low 60s. Now what we're looking for is to kind of resume that dollar cost averaging, because we are breaking out. And usually what happens is that if you get if you get a big weekly candle over the previous all-time high, and when I say previous all-time high, I don't mean the one from earlier this year. I mean the one from last cycle. So to the $69,000 mark. If you notice from when we first ran up to 74, we've done that every cycle. We've actually run up, you poke a new all-time high, and then you consolidate. In the past, we've consolidated for 2 weeks. We've consolidated for 2 months, but never did we ever see a consolidation for about 7 or 8 months, such as what we've had here. Meanwhile, the markets, the stock markets were making new all-time highs, right? The S&P 500 was making several new all-time highs while we were consolidating. So we ended up in this big bull flag that's now breaking out, essentially, just this massive, massive multi-month breakout. So now we're getting that weekly candle, unless the wheels fall off and something bad happens in the world, which doesn't seem very probable. Sunday evening, we'll have our weekly close on that candle. And it's going to be, up here in the upper 70s. Basically, what happens at that point is that confirms your breakout. And then you have to basically, like we joke around and say, long your long, because it's one of those deals where you're going to have to buy high and ultimately sell higher. But when Bitcoin does this, and Bob, you've seen it a number of times in these cycles, it just goes into this mode. And you're in this mode for the next, 8, 10, 16 weeks. And it just doesn't really give back. You will be lucky in the next couple of months to even have one red weekly candle now. And people have a hard time transitioning from what was the last 8 months, very choppy, trappy, false breakouts, to now no pullbacks, right? And that's what Bitcoin does. So you just have to recognize the mode that we're in, and now, I'm telling you guys, that's the mode that we're entering into now. So pullback should be very slim, Bob, and now it's actually the fun. These windows don't last very long, but they're very fun to trade because you basically just the dips are snapped up pretty quickly, I should say, yeah. And it makes for pretty fun swing trading to the long side, which is the best side.
Yeah, well, what happens to most people though, and I'm warning you now, is that I guarantee you that many people will be afraid to take this trade. We talk about how hard a bear market is to trade. A final blow-off bull market is the hardest of all, because at any point you're not heavy enough, and do I throw in on it? So I think we'll talk more about this next week. Look, there's going to be set points where you're going to need to scale out as it goes up. Saying that we're going to be wrong. But typically what happens in this environment here is that it's not going to let you in. Everybody now is going to be waiting. Oh, we had a huge weekly candle. I'm going to wait for it to pull back. And then it does it again. And then what really happens at the very end, you get this last surge. And that's when all the people that have been afraid get in the move. And it's out. Look, Phil shows this chart here. I have the same one that I calculated a different way, an ABC move. We're looking at 97,000 to 120,000 into February, which ties into the inauguration, which we'll talk about on Monday. So, even though you may catch a week that you're going to be caught goofy-footed, if you're not in, you can average in, and if you're already in, you have to buy higher. In fact, most people don't make money buying low. They make money buying higher and selling higher. It's an oxymoron. But the other thing too, if you're afraid of Bitcoin, look, there's Misty, there's Coney, there's MicroStrategy, there's BITO, there's Ybit. There's a whole lot of ways of, CleanSpark and Wolf. There's a whole lot of ways you could trade this thing if you're afraid of Bitcoin itself, but have exposure to Bitcoin. So we're trading all those. We're making good money in those, and I think you just gonna have to have courage of your conviction, because this move here, once it happens, it'll be there 2 or 3 years before you get another move like this.
Oh, so absolutely. Yeah, absolutely. And then if you notice too, like over here is where we had our weekly breakout over our previous all-time high. This is back in 2020. And this is what I'm talking about, these big weekly breakout candles, right? So technically we came up and we broke the all-time high on this candle, and it chopped for a couple of weeks and then broke out. And so essentially we've done that, but it took 8 months to do this. But we never really got this big breakout candle over the previous high, which was back in 2020, was breaking out over that old 20K high, or that 19 and change, right? And then what did we do? Run up into the inauguration. So the setup's like really similar here. We have there's your big breakout weekly candle over the previous cycle high. And we just didn't really have that. We thought maybe something over here. It wasn't a big breakout candle though. We're looking for those big breakout candles, and that's what we have. So like we showed you guys on the previous 2020 chart, this should be multiple green candles here for the next few weeks. You got to wrap your head around that. And now we're going to have fun trading this thing.
Yeah, and look at the wider the consolidation, the stronger the upthrust. So people had plenty of time to get out. The people that are in this trade now breaking out are strong hands. All right. right? The weak and the impatient are gone. And so the chase is on, and it's going to be on for stocks too. Hey, we're making this a long vid. We'll see you guys tomorrow. Trade with us. We have Black Friday specials running. We're doing really well. You know, humility aside, we're doing really, really well. And this is a time to make money, and we have really great tools, and we're going to really help you become better, more successful traders using proper tools and proper protocols to trade more effectively and make a lot of money. And when this thing goes south, we're gonna make a lot of money too. Thanks for listening. Thanks, Phil. Catch you guys tomorrow.
Trade Genius.